All right, technically, Bitcoin is actually right now at all-time highs. Actually, yesterday was the highest daily close ever on Bitcoin. I mean, we've had higher prices, but we've never ever closed higher. And I think, as I said before, that the next move for Bitcoin is higher, not lower. And in fact, not only do I think that the next move for Bitcoin is higher, I think that the next move for Bitcoin is much, much, much higher than we are today. I'm going to show you today why we are going higher, and I'm going to show you why the next move is actually much, 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 much higher. And I think today is a show that you don't want to miss, because this could change the way that you make not only your crypto investments, but a lot of other investments. So if that sounds good to you, let's get the show on the road, guys. Much, much, much higher. That's the motto for today's show. And I'm going to show you exactly why we are going much, much, much higher, why the next move is higher. Now, look, the truth is, I don't know whether we're going to go higher today or tomorrow, whether we're going to break 109 today or tomorrow. What I can tell you is that I'm willing to put everything that I own on the fact that we're about to go much, 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 much higher. And when you see the data that I'm going to show you today, when I break down the thesis for you today, I'm 100% sure that when you see what I'm explaining today, which was already explained on the Front Runners morning call this morning, I think that you guys will see exactly what I see. So if that sounds good to you, what I need you to do, I need you to do me a huge favor. I need you to literally obliterate the like button, like literally just destroy the like buttons. One of the things that I've been seeing is that the number of likes versus the number of views that we have on the show hasn't been as high as it's always been, and that affects the show distribution. So I'm asking you, after all the research that I do and everything that I do, all I'm asking you to do is just to obliterate the like button. It'll take you guys 1 second, and it'll make a huge difference to the distribution of the show that we've been working so hard to put together, myself and the 10 researchers that we've been doing. All right, so with that aside, I really want to go through the thesis with you, right? Now, we are at all-time highs right now. Like literally we are at all-time highs. I know some people say, no, but hold on, the all-time high is actually 109,513. It's not really, because that's a wick. And if you take the daily close, literally the highest daily close we've ever had was actually yesterday, and that was at about 106 minus 235. So you can actually do the maths. There's a couple of reasons why I think that Bitcoin's going higher from here. Some of them are anecdotal, small reasons, but some of them are much, much, much bigger and much more macro issues. The smaller issues are that we are at all-time highs, and the leverage is very, 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 very low. As a result of the fact that the leverage is low, the funding rates are like very, very, very low, which means that there's no froth in the market. And usually when markets crash, it's usually when there's a lot of froth in the markets. There's zero froth in this market. And actually, just to show you a graphic, so we went and we plotted out every time Bitcoin actually broke the all-time high levels, we plotted out what the leverage rates were to show how frothy the markets were at that point in time. And you can see that this is really one of the first times ever that the markets, I mean, we've had it once or twice where we've been at 1.72%. Now we're at 2.85%. And then here, the rest of the time, we've broken the all-time highs. But we've been at very, very, very high funding rates, which means there was lots of leverage in the markets. That's the first thing. But it's not all not all about leverage. Also, if you look at the volatility, now remember, there's a lot of traders that buy and sell options based on volatility. The higher the volatility, the higher the price of the options, right? And so the higher the entry point gets into the Bitcoin market. This time, we are at a high, and if you look at the volatility on Bitcoin, so there's the implied volatility. Just look at where the volatility is relative to every other time that we've been on an all-time high. You can kind of see that, I think, at this on this chart over here, where you look at all the times where we were high, and you look at where was the volatility. This time the price is high, but the volatility is low. That effectively means that there's much, 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 much more fuel in the tanks. And if you look at that from a technical point of view, you also say, hold on, that comes suspiciously close to the golden cross happening. Now, I'm going to remind you that sometimes when we do have a golden cross, we get a slight dip. You can see, like here, we had the golden cross, we had a slight dip, and then we went back up, and you can kind of see the same thing over here. You can't even see it. It's so tiny here. We had a slight dip, and then we went up again. So we could get some little retrace. But I do think that in the next couple of days and weeks, I do think we smashed the all-time high, which is exactly what we predicted in our Good Morning Crypto newsletter. We made a prediction a few days ago. I'm sure you all already subscribed to the newsletter for free. If you don't, there's a link below, and it's a free newsletter. And we predicted that between May 22nd and June 4th, we would break the all-time highs. And here we are about to break the all-time highs. So that's the good news. The good news is we're breaking all-time highs, and chances are after we break this all-time high, we're actually going to go much higher. That's the good news. Now let's talk about, well, I won't say the bad news. It is bad news. It's great news for Bitcoin and Bitcoin holders, but it actually, in the big scheme of things, it is actually quite bad news. And that is the reason why Bitcoin is actually spiking and why Bitcoin is actually breaking all-time highs. Now, you may not like this, but it's pretty important that I actually break down this thesis for you. So why is Bitcoin breaking all-time highs? Well, the answer lies here in this tweet, which says, "This is unbelievable. For the second day in a row, Japan's bond market is bidless, with 30 and 40 years at record highs. Meanwhile, the second biggest bond market is imploding." So what does this refer to? It refers to a Japanese auction that happens, I think, every single day, or every day, I think. And in that auction, what the Japanese people or what the government tries to do is it auctions bonds, it auctions debt into the market. So they basically go to the market and say, who wants to buy our debt? And they say our debt, our 40-year debt is actually priced at 3.48. There are no buyers. They went up to 3.5. There were no buyers. They went up to 3.6. There were no buyers. And for the second day in a row, there have been 0 buyers for Japanese debt. So let's quickly understand what that means. It means that the Japanese government needs money to fund itself and its operations and whatever else. And the only way that it can get money is by taking on debt. And for the second day in a row, no one wants the Japanese debt. That is where we're at. And so what they're doing is they are increasing the rate at which they are selling the debt. In other words, first they said, look, if you take our debt, you will get 3.5%. No one bought. And then they started going a bit higher, and still no one bought. And they started going a bit higher, and no one bought. And so now you can see Japanese bond rates are basically going parabolic. They're basically saying, look, we'll pay whatever it takes, in inverted commas, we'll pay whatever it takes to get people to actually buy our debt. Quite a scary situation, because remember that Japan actually needs the money to actually fund its operations or to fund government activities, and they can't fund the government activities because they cannot raise money selling debt. That is what you call a debt implosion, effectively. And what's happening right now is that we've got Japanese debt imploding, and as a result of that, what's basically happening is you've got Japanese yields going up. Now, what's the problem with that? The problem with that is that Japan the reason why people don't want Japanese debt is because if people look at the amount of debt in the Japanese system relative to the amount of GDP, relative to their productivity, because remember, GDP is a function of a nation's productivity, and the GDP to debt ratio is a function of what is the productivity ratio of the country versus the debt that country's got. Today, Japan has a 237% of GDP, a debt at 237% of GDP. That puts Japan number 2 in the world behind Sudan in terms of the amount of debt relative to their productivity. Now, why is this happening? Because Japan has an aging population. The aging population, they had this thing where people weren't having kids, and as a result that they don't have a young population. And as a result of not having a young population, the previous generation which we're producing is getting older. As they get older, they start to produce less. As they get older, they also start to take on more social security benefits or social benefits, which means that you've got an aging population which becomes non-productive, and therefore, because they're not producing, the GDP goes down, and in order to sustain the operations of the country, you now need to take on more debt. And so Japan is in this debt to GDP crisis. And as a result, people are kind of going, hold on a second, we're not going to take on any more Japanese debt because we think the Japanese debt is becoming more and more worthless. And there's a smaller and smaller and smaller chance that Japan is actually going to be able to pay this debt. And so as a result, no one is buying Japanese debt. Now, Japan actually does have a choice. It's not like they don't have a choice. if there's no one to buy the Japanese debt, what they can do is they can actually print money and they can buy the debt themselves. So the central bank can actually print money to buy its own debt. It's a normal thing. It's been happening in Japan for a long time, and it happens very, very, very frequently around the world. When there's no buyers for your debt, you can print money and you can buy the debt yourself. Sounds like a very, very, very simple fix, right? Only problem is that if you do print money and buy the debt yourself, then you put too much money in circulation. And as a result of having too much money in circulation, you basically get high inflation. Now, the thing with Japan is that Japan generally has had very close to no inflation, as you can see. So you can see Japan's had very, 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 very long periods of little inflation. And now all of a sudden, for like one of the first times in a long time, Japan is actually starting to get inflation. So Japan is now faced with a dilemma. And the dilemma is a very simple choice. Either they're going to print more money and buy their own debt and deal with inflation, or they're going to raise rates and then something catastrophic happens. And we'll talk about what that catastrophe is at the moment. If they land up buying their own debt, they're going to put more money in circulation, and then they're going to have a massive, massive, massive inflation problem. If they do that, if they land up buying their own debt and they issue more debt and print more money and issue more debt, their debt to GDP ratio is just going to get worse and worse. And the worse and worse that your debt to GDP ratio gets, the less and less likely people are to actually buy your debt. So no matter what they do, Japan is in a bad situation. In fact, the situation is so bad that the odds of the Japanese prime minister out before the end of 2025 are actually skyrocketing on poly markets. And there's pretty much no way he can fix this. He's acknowledged this, and he said, look, we know this. We are the same as Greece was. Greece had a very, very, very similar problem, but they also had a rising population and shrinking GDP. And we all know how the Greece story ended. Greece actually landed up defaulting on their debt, which is the worst case scenario, because then your currency goes to zero and everything else tumbles with it. So now the question is, well, the other option that Japan can do is actually increase interest rates. However, if they increase interest rates, I think that's where a catastrophe actually lands up happening. And I want to show you where that catastrophe is. So remember, they can either print more money or they can increase interest rates. Okay? So what will they do? If they print more money, you know what happens? They can buy their own debt and they're going to increase inflation. If they increase interest rates, we get into another problem, and that's the unwinding of the Japanese cash and carry trade. And I want to talk to you about that for 1 second, and that's not what the show's about and why Bitcoin's going to go up. So just bear with me for 1 second here. In the past, because Japanese debt has been so cheap, and I'll show you how cheap Japanese debt has actually been. I'm going to go onto the 1 month chart, and I'm actually going to go as far back as I possibly can here. But what you can see is that in the past, Japanese debt was actually priced at close to zero. You can see that over here, right? You see, they reduced, the highest that it's ever been, or that we can see, is 2.5%, but it actually went to zero and close to zero. Now, when the interest rates went to zero, people, and this is on a 40-year. I want to quickly just show you something on a 10-year. I want to show you like the rates on a 10-year. That will show you just how cheap Japanese debt actually was. So the highest that it's ever been is 1.5%, and it's gone down to even negative. That means that people were getting paid to borrow to take Japanese debt. The Japanese government was paying people. People were getting paid to create credit in Japan. So what did people go and do? They took this money at zero interest rates and they invested it in other countries like the United States, where they were getting a return of 3%, 4%, and 5% on treasury yields, right? So you borrow in Japan for zero, and you take that money, you take billions and billions and billions of dollars of that money, and you invest that money in other countries, and that was what was known as the Japanese cash and carry trade, right? Problem is that as soon as rates start coming up, that trade starts to unwind. If you borrowed at zero and you were getting 2% in the United States, you're making 2%. But if you're borrowing at 1.5 and the rates in the United States, you're getting 2 or 3%, it's actually not worth it anymore. And that cash and carry trade starts to unwind. Problem is that Japan is already the second biggest holder. It's the biggest holder in the world, the biggest sovereign holder in the world of US debt. And so the problem is that if the Japanese cash and carry trade unwinds, the first thing that they're going to sell is they're going to sell US treasuries, right? Problem is that already US treasuries are being sold. Remember, we did a show the other day where I said to you guys, the US also has a problem because its bond rates are going up and they've just been downgraded. Now, imagine a world where people are dumping US treasuries because they've been downgraded, but people also start dumping US treasuries because the Japanese cash and carry trade unwinds. And so effectively, what you get is you're getting Japan holding a lot of these foreign treasury bills, and there's the risk of the cash and carry trade unwinding. They own 1.34 trillion of US debt, they own 0.38 trillion of euro debt, they own pounds debt, etc., etc. And you can see that when interest rates start going up, they start dumping US treasury bills. So you can see that over there. So we're getting into a position where the one risk is that the cash and carry trade unwinds. And I'm sure you've heard about the risk of the cash and carry trade unwinding, but that's not what I wanted to talk to you about today. That just shows you that we're getting into a position where the cash and carry trade may unwind, but also that they will start selling off US debt. The problem is that as they start selling off US debt, the value of the US debt actually also devalues. So the US has already got a problem where people are dumping its debt and its debt rates are going higher. Now the Japanese are going to start selling more US treasuries, which is going to drive the US treasuries much higher. Okay, what will that do? The problem with that is that as US debt starts to yield more, then all the other countries in the world, in order to make their debt more attractive, will have to raise their interest rates. And so what you're going to get is you're effectively going to get a situation like this. Work with me here. People start unwinding the Japanese cash and carry trade. As a result, they sell US treasuries. They sell the US treasuries, and therefore the yield on US treasuries has to go up because nobody wants the US treasuries. As the yield goes up on US treasuries, people say, hold on a second, if I can get 4.5% on US 10-year credit, well, then I'm not going for 3.5% on Australian. And so all of a sudden, people look at this whole debt situation and say, hold on a second, which one of these countries can actually pay back its debt? Chances are the US can't pay back its debt. Chances are that Japan also can't pay back its debt. It's almost insolvent. In fact, it's 100% insolvent. So which one of these countries can actually pay back their debt? And people start saying, hold on a second. Maybe none of these countries can pay back their debt. Maybe these debt instruments that we're actually holding are actually worth nothing. And that is exactly what happens. You know, like when you have an altcoin and the altcoin starts going down in value, it all feels okay until the altcoin actually starts going down in value. When the altcoin actually does go down in value, people go, oh, that's such a shitcoin, get out of it as quickly as possible, right? So on the spiral, as people start exiting, then more people start exiting because more people realize that everybody else has realized that the coin is actually worth nothing. And so by devaluing the US debt, we drive rates higher. That drives rates higher all around the world. And then investors start questioning whether any of this debt's actually got value. And it's like a game of hot potato because you never want to be the last person holding on to the debt that's actually worth nothing. Everybody knows that there's not a chance in hell that the US can pay back its $37 trillion worth of debt. Everybody knows that there's not a chance in hell that Japan can pay back its debts. Everybody knows that all this debt is worthless. The reason why they're willing to hold it is because they just don't think the country is going to default quite yet. The thing is, that happens until such time as everyone just starts to dump all their things because one of them is exposed. So it's like a house of cards that actually starts falling down. And I don't know if it's going to happen very fast, but I know for sure that it's about to happen. You can see it's happening in Japan. Nobody wants their interest rates. They've had their debt 2 days in a row where they've had auctions, and no one wants the auctions, and therefore they keep raising the value of their debt. Eventually, that is going to cause them to increase interest rates. There's an interest rate decision which is happening in Japan in the beginning of June. And then they may raise interest rates. And if they do land up raising interest rates, well, then the cash and carry trade is going to unwind. And if the cash and carry trade starts to unwind, the US Treasury yields go up. And if the US Treasury yields go up, that drives up all the price of debt. And that could spark people effectively exiting all this toxic debt in the world. Well, then the question is, what actually happens? And I think Grok or 𝗦𝗲𝗋𝗃 actually asked Grok, and he says, it's called a treasury collapse, and that would likely contract the money supply, initially due to bank losses, credit freezes, and the repo market. The truth is, there's not a single bank in Japan which is actually solvent if the rates of the debt that they're holding actually go down, and the price of up, and the price of the debt that they're holding actually goes down. And so as a result, the credit default swaps, in other words, the probabilities that people won't be able to pay the debt. A credit default swap is an instrument which you buy if you think that people aren't going to repay their debt and people are going to default. You can buy a credit default swap. And you can see that the price of credit default swaps is spiking through the roof, which basically means that people are now starting to believe that most of these nations, and therefore governments and countries, just won't be able to repay their debt. And this could start a debt crisis, a massive sovereign debt crisis. Now, I don't want to be alarmist, and I don't think that it's going to happen today. But I think the fact that yields are dropping, that yields are increasing today, and the price of debt and the demand for debt is dropping today is a little bit dangerous. And I'm going to show you why. It's dangerous, but it's actually amazing for Bitcoin, which is what Dan Tapiero says. He says, quietly and off the radar, the Japanese long bond yields are going parabolic. Time to watch Japan. Unsustainable deficits have been the norm for 30 years. Now a problem implies more strength of the yen versus the dollar. If it breaks 120, it's very bullish for gold and Bitcoin. So let's talk about why this is very bullish for gold and Bitcoin and how the whole thesis actually comes together. By the way, just let me know. Let me know if you guys have understood the breakdown, if you need me to explain anything to you guys. Because as I said, I know this macro stuff does get a little bit complicated. So let's talk about why this is so good for Bitcoin and why I'm willing to put so much of my net worth and so much of my wealth into Bitcoin to do this. So as I said, there's going to be no demand for Japanese bonds, or there's going to be no demand for bonds. The reason why there's going to be no demand for debt is because people are just realizing that all this debt is worthless, and eventually nobody's going to be able to repay their debt. And so now the thing is that you've got all this money which was invested in debt, billions and billions of dollars which was invested in debt. And people are now exiting the debt and they're saying, where can I put my money? Now, traditionally, what happened traditionally is when you used to put money into debt, you used to take it out of risk assets. And when you used to put money in risk assets, you used to see that so when risk assets used to go up, the yields or the price of debt actually used to go down, would go down. There was an inverse correlation. In other words, when people went to, people were either invested in risk or they were invested in bonds. What's happening now is that you're seeing that people are going, hold on a second. I don't really want to be invested in debt because it's a hot potato. Nobody's going to be able to pay back that debt. So where should I put my money? I've got to take this money that's in debt at the moment, and I've got to put that money somewhere else. Question is, where do you put it, right? Imagine this. Imagine that you're invested in debt. You think that the debt's not worth anything, and now you're starting to panic. You're starting to look, I don't want this debt. I'm selling it. Okay, now you got cash. What are you going to do with the cash? There's not going to be demand for cash. The cash is going to start devaluing because the reason why you take cash is that you can take the cash and invest the cash in debt. But if there's no debt, or if you don't want to be buying debt, the cash starts to become worthless. And if the cash starts to become worthless, then what happens is that you'll see that the currencies actually start to devalue. So you'll see that the 𝗙𝗃 will actually start devaluing. That's probably why the 𝗙𝗃 is starting to come down today. And I'm sure that if I look at all the other currencies, they're also starting to devalue. So the question is, where do you put your assets? And for this, I actually want to tell you a story that's quite close to home. So as you know, I'm living in South Africa, and you know, South Africa borders a country called Zimbabwe, and you've all heard of Zimbabwe. And I remember that there was a period where Zimbabwe couldn't pay its debt. People basically said, look, we don't believe in Zimbabwean debt. Zimbabwean debt is garbage. And they started to devalue their currency. And so all my friends basically left Zimbabwe. They ran away from the country, and the country basically defaulted. But when I spoke to people in Zimbabwe afterwards, and I said to them, guys, like, you know, our currency in South Africa is devaluing. What do you suggest I do? And they said, basically, buy property. I was like, why do you say buy property? They say, look, the number of people in a country kind of remains more or less the same. And regardless of what happens to the currency, people need a place to live. And so they will pay the same dollar equivalent for a property or a place to live. So why am I saying this to you? When a currency devalues, when a currency goes from where it is today to close to zero, or when people don't want to be invested in debt, what they want to be invested in is limited supply assets. Now, what are the limited supply assets? The first one is property. If you want to live in a certain city and there's X amount of properties in that city, essentially, it would make sense for you to hold the property because you know that people will pay a higher price to actually live. So one thing that you can actually buy is you can buy property. I actually think that property is actually a very good investment. Specifically, I think residential property is a very good investment. You know why? Because residential property is limited in supply, number one. Not very limited, but kind of limited in supply. But number two, it's one of those things that AI ain't going to disrupt. So AI may disrupt office space. AI may disrupt many other businesses. But the one thing that humans will always need is humans will always need a place to sleep. So one thing that I actually would invest in is I'd actually buy low-cost property, like entry-level property. I think that would be immune from the AI crash, from the AI disruption, and at the same time, property is always a good investment in places where the currency is devaluing very, very fast, because property does keep its value in absolute terms. But then I would go to more limited supply assets, and that's exactly what's actually happening right now. So you can see right now, if you look at what's going on, the gold price has actually spiked. The silver price has actually spiked because those are the limited supply assets, right? And if you look here at this tweet, even Peter Schiff says, he says, today was an unusually strong day for precious metals. Not only was gold up 2%, but actually silver rose 2.5%, palladium jumped 4%, and platinum shot up over 5%. Precious metals are rallying on the inflation risks and the devaluation of the currency risks and the risk that governments will land up printing a lot more money. So gold, silver, Bitcoin are all rallying because of this thesis that I just broke down for you today. And that is probably why you can see that Bitcoin has become much more correlated with gold than it has been in the past. Look at the difference in correlation. Bitcoin is now becoming the scarce, limited supply asset that's actually happening. In fact, one of the biggest stats that I saw was that actually today, more Americans actually own Bitcoin than actually own gold as an investment asset, which is like, that's quite crazy, but that's actually where we are. People are actually starting to realize this, right? I also want to show you something else. I want to show you something quite quickly. I want to show you how quickly currencies land up devaluing. And these are real stories, right? Like when the currency collapse happens, it happens very, 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 very quickly. It's all okay until it's not okay. And then we get a lunar type situation where it just spirals out of control. So you can see that initially, one Zimbabwe dollar was actually stronger. In 1980, one Zimbabwe dollar was actually worth more than $1. You'd pay 69 Zimbabwean dollars to get one $1. And then the government started to do crazy things until eventually in 2004, 24 years later, you had to pay 5,000 Zim dollars for $1. And then eventually it went in 2008 to $100 trillion. It's a true story. $100 trillion for $1. And then they had to launch a new currency. And that's not unique. Argentina, the same thing basically happened. The same thing's happening now against Bitcoin. And so I want to read you one tweet, which I think is probably one of the smartest tweets that I've ever read. And it comes from Ray Dalio. And he says, look, the US downgrade, read the US downgrade. You should know that the credit ratings understate credit risk because they only rate the risk of the government not paying its debt. They don't include the greater risk that countries in debt will print money to pay their debts, thus causing the holders of the bonds to suffer losses from the decreased value of the money they're being paid back, rather than from the decreased quantity of money that they're getting. Said differently, for those that care about the value of their money, the risks for the US government debt are greater than the rating agencies are conveying. So what does he actually mean? What he means is that imagine that you've got a bond that is a face value bond of $1 million US. But by the time that that bond pays itself back in 10 years, the value of $1 million can't even buy you a bottle of water. The risk for you is not that they're not going to be able to pay you back the $1 million. The risk for you is that by the time they pay you back your $1 million, that $1 million is worth absolute nothing. So I'm going to look again at this Zimbabwe versus USD chart. And the reason why I'm going to show you this is because I lived here. I saw this. I saw people that had $1 million or $2 million Zimbabwe dollars or $3 million Zimbabwe dollars. And that was a lot of money, right? And then in 2008, just look at what happened in 2008. It went from 5,000 to 100 trillion, which means that the $1 million that these people had, which they worked really hard for, was actually worth nothing by the time they could redeem their bonds. And so, again, I want to read you this tweet because I just think that this tweet summarizes everything so perfectly. And it's exactly what's going to happen. The US downgrade, you should know that the credit ratings understate credit risks because they only rate the risk that the government won't be able to pay its debt. They don't include the greater risk that countries will print money to pay their debts, causing the holders of the bonds to suffer more losses than the decreased money that they're getting. And so, effectively, that is why I think the price of Bitcoin is actually going up today, because the markets are putting together this thesis of 1 + 1 + 1. Now, I want to show you what happens in a micro environment versus a macro environment, right? In a micro environment, which is Japan, let's just call Japan a micro environment. In other words, one country. You have one company that allows for Bitcoin investment in an environment where nobody wants the treasury yields. So what's happened to their company? Company is called MetaPlanet. You all heard about this. It's the MicroStrategy in Japan. And this is what's happened to its shares in the last 2 days, right? In the last 2 days, its shares, which are just the same as Michael Saylor, has gone up in 2 days 162%. So it's gone in a micro environment. In other words, in a one country environment where this is starting to happen and nobody wants the debt, and they're dumping the debt and saying, look, we're dumping the debt. We don't want to be in equities because equities also scare us. So what can we be in? They're rushing to gold and they're rushing into the one company that has Bitcoin exposure. Now, coincidentally, this company is also the most shorted company, as was MicroStrategy. It was the most shorted company. And now there's a massive short squeeze. But it just shows that when things turn, things are going to turn really quickly. And I remember in Zimbabwe and I remember in Argentina, things were okay until that 1 week where things weren't okay. And then things weren't okay very quickly, from a situation where just a week before, everybody just wanted to believe that everything was okay. Everything is not okay. The US debt is never going to be able to be paid back. If you are telling me that you believe that the US can ever pay back $37 trillion of their debt, $37 trillion, let me just refresh that. If you believe that the US can really pay back $37 trillion of their debt, we're not made of the same cloth, and also we don't have the same internet speeds. Why is it doing this? Maybe because there's so much debt in the US that even the website won't load now, right? Well, it won't load now because there's so much. And what you're seeing again in a micro environment is that people are running to the one outlet where they can actually buy Bitcoin using their Japanese yen on the stock market in Japan. And so, I don't know, if this doesn't convince you that Bitcoin is about to break the all-time high. Now, look, I'll be honest with you. I don't know if there's going to be a slight pullback between 107 back to 99 or 98. I don't know, and I don't actually care because I zoomed out and I can see the big picture, and I can see that the big picture is I want to use the word imploding. I'm not saying it's all going to collapse tomorrow and Japan's going to collapse tomorrow, but I'm saying the one safe place that you actually want to be in is you probably want to be in Bitcoin and maybe even gold, guys, maybe even gold. In fact, I mean, one of our exchange partners, Bybit, actually allows you to buy gold. I'm sure there's a link below. I'm not even going to point out to it, but you should look to actually diversify your holdings into a little bit of gold. Anyway, as I've said before, everything that about this was written in Good Morning Crypto, which came out before the show. Chaps, if you want to sign up for Good Morning Crypto, there is a link below. Trust me, it's a free newsletter. I'm not asking you to pay. Don't sign up with any affiliate links. Don't do anything. Just go to Good Morning Crypto and just sign up and get the alpha in your mailbox every single day for free. Let me just quickly go here so you can actually see it. In your mailbox every single day for free. You can go and you can take out, you can go and get it. It is, yeah, you can just sign up over here. Next thing is, all right, let's talk about altcoins. Let's actually get into altcoins. So in order for altcoins to move, what we need is, the reason why Bitcoin is going to move is because Bitcoin is a limited supply asset and people believe that it's a limited supply asset. And with certain altcoins, like maybe the major altcoins, they may actually get some of the cascade of this because they're also limited supply assets, right? Like you could say that like Ethereum is a limited supply asset and Solana is a limited supply asset. Those are real limited supply assets, and limited supply assets will all benefit, just like silver benefited when gold actually went up. And what you can see now is that the altcoins actually are starting to respond, right? You can see like here's the altcoins are starting to look a bit better. Solana is looking a bit better. The bubbles are all looking green. Josh, have I told you how much I love the new bubbles yet, or have I not told you? You can see that our thesis on Athena is starting to play out. You can see that a lot of the other altcoins are actually going green, but there's one sector actually, which we'll talk about a lot, I think tomorrow, that is actually going green. And that sector is actually AI. So if you look at the AI sector, so I just want to see if I've got some more stuff to show you here, but effectively there's a massive surge in the AI narrative. And the reason why there's a massive surge in AI narrative is because what happened yesterday is Google actually announced some of their advancements in AI. So Google obviously is one of the big players in AI, and they started to announce some of the advancements that they have in AI. One of the amazing things that they announced is whilst you're having a Google Meet, you're going to be able to talk in your language to someone in a different language. Just like, I mean, this is like absolutely mind-blowing.
You can see how well it matches the speaker's tone, patterns, and even their expressions. We are even closer to having a natural and free-flowing conversation across languages. And today, we are introducing this real-time speech translation directly in Google Meet. English and Spanish translation is now available for subscribers with more languages.
Can you imagine a world where you can have a meeting with someone in a different language in real time, and Google Meets is effectively translating it in their voice in real time into other languages? Well, that's one of the things that was actually broken last night by Google. There were many others. Specifically in the video, I've got to show you this. This is all AI generated video. I mean, just watch this.
How much wood would a woodchuck chuck if a woodchuck could chuck wood?
How much wood would a woodchuck
This is all
chuck
AI
if a woodchuck
generated,
could
guys.
chuck wood?
How much wood would a woodchuck chuck if a woodchuck could chuck wood?
How
No
much
cameras,
wood
guys. No
would a
cameras.
woodchuck chuck if a woodchuck could chuck wood?
No cameras. This is all prompted into a chat GPT type agent, and you prompt it, and what it does is it actually creates the whole movie for you with fictional characters and whatever else. I do think that we're getting into a bit of an AI pump. Well, I think tomorrow, I was going to do an AI show today, but the Japanese story was way more important. I think tomorrow we'll end up doing an AI show, so we can actually talk about all these innovations. In the meantime, if you are looking at AI, one project that I am actually looking at, and they are a sponsor of ours, is 𝗏𝗏𝗏. So what 𝗏𝗏𝗏 is, it's a marketplace for custom specialized agents, right? And effectively, you can create and train an agent, and you can monetize your own agents, but they also have specialist agents. So if you're looking, for example, for a social media management agent, there'll be a social media management agent that you can just license, and you can use it to manage your social media. and effectively pay, or the other way around, you can create one and you can effectively earn revenue. So this is a project that I'm launching. It's called that I'm watching. It's called 𝗏𝗏𝗏, one of our sponsors. Market cap $26 million. This is one that I'm definitely watching. So keep an eye out on it. They're also a good team, and they seem to be very much delivering. And then just before we go, let me know if you've enjoyed the show. Just before we go, someone says, yeah, there is the Trump dinner tomorrow. Yes, it's the Trump dinner tomorrow on the 12th. Oh, sorry, 22nd is the Trump dinner. Yeah. Someone said, bro slipped up. I wish I was launching an AI project. I'm not that smart. I don't know if you guys heard this. Before we go, I'm gonna play this, and then what's gonna happen is the video is gonna get banned from YouTube. But I think it's so funny and so good. So Elon Musk was asked about USAID and Bill Gates' comments around USAID around the kids, and this is how he responded.
I do want to ask you about USAID and the comments that Bill Gates made the other day, and I know that you called him.
Yeah, he's a huge liar.
I know you've said that already.
That's
I wondered,
also,
and I'm just.
Who does Bill Gates think he is to make comments about the welfare of children, given that he frequented Jeffrey Epstein?
Okay, well, he said he regrets.
Ooh, that's the mic drop moment. Anyway, guys, on that mic drop moment, I will see you guys again tomorrow. Until then, trade well, my friends.